Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 17th of April 2026. The first chart is the US Dollar Index Futures, and they continue to respect the levels to a fair degree. Price moved down a level this week to this new lower level, and price did close slightly below the previous bar's low, which is generally a sign of weakness. Only a modest sign of weakness, but a sign of weakness all the same. There was a modest attempt to remain in the previous zone, but that eventually failed and price did push down to the next lower level. As I said earlier, the market is respecting the levels quite well. You can see where the next level lower is if this weakness continues. I do note that volume reduced to about the average this week. So that suggests that selling pressure is easing in this market. You may find a stronger attempt to hold on at this level next week. The next chart is the E-mini S&P and S&P 500 index futures. And they've also been respecting the levels quite well. I note that during the week, this market spent considerable time at this level before just pushing above it on Friday. You can see price came back here, found some support. It's pushed higher over 3 weeks now, each time with a little test for supply below the previous bar's close, just to make sure that supply is not overwhelming. And then in response, price has pushed higher. Selling pressure has eased in this market, there's no doubt, and that's allowed the market to float up on reducing volumes. That's not always particularly strong, although I do note that volumes remain around the average, so they're not really low volumes. They're average volumes, and that suggests that it's genuine trading, and it's not weak trading, it's not low volume trading. So that actually looks okay at the moment. The market's feeling a little more optimistic than it has done more recently, and prices pushed up and closed above all these highs that were causing such angst previously, where the market was really going nowhere. And over 3 weeks, it's really accelerated higher with widening spreads over each week. So that's quite good at the moment. I do expect the market will probably test for supply back at this important level over the next little bit. It may only be over a couple of days, we'll see. But I do expect the market will probably come back and test that level for strength, because it's a pretty important level. Next chart is the US Treasury 10-year note futures, and they continue to push higher in a grinding fashion more than anything. Prices pushed up to this breakdown level above. It has shown no real intent to challenge that level. You can see that volumes are reducing and are well below the average. So while selling pressure may have reduced to some degree, there's no great demand in this market. Price is really floating higher on a lack of selling pressure rather than any great demand buying it higher. So this is a bit of a weak market and it's vulnerable. If supply comes in, this market won't have enough buying support to sustain the current levels, and price will likely be pushed lower quite easily. Copper price futures. Copper price futures pushed higher this week, particularly with the weakness in the US dollar, and that allowed the market to push right up to the highs of the range. These two controlling bars up here have held that high for a long time, and prices come up to challenge it. You can see there was a test for supply below the previous bar's close earlier in the week, and then price has pushed higher and closed at the logical level, and it's possibly the highest close on the chart. So that's actually a sign of strength. You'll find the market will probably test for supply at least for a day or so in response next week. If there is going to be a breakout and a push higher, you'll generally see a test for supply first, and then an acceleration higher. That'll change if there was real severe weakness in the US dollar. The price will just accelerate higher regardless. But in a general sense, the market will push up to a level like this, test for supply for a short period, and then if supply is found to be low, there'll be an attempt to break out like that. Gold price futures. Gold price futures also tested for supply below the previous bar's close earlier in the week, in there, and then just moved higher, mostly within the range of the previous bar for the whole week. Volume remains below the average, so that's not particularly strong. This is the market just moving sideways in consolidation mode. There's not a huge amount of demand in the market right now. So that does leave the market a little vulnerable, and you may see price come back to this level or even this level if weakness did emerge. But at this point, price is floating higher on a lack of selling pressure to a large degree. Silver price futures. Silver price futures are very similar, as you would expect, to gold. Volumes remain well below the average, and price actually did push higher this week and closed well above the previous bar's high. There was a test for supply early in the week and then a push higher. The increased spread here does suggest that some buying support, some demand was present in the market, whereas in gold, it wasn't quite as present, and the market just traded as almost an inside bar to the previous bar. So this market's just a little bit stronger, or perhaps a little bit more optimistic than what we've seen in gold over the last few weeks. This is like crude price futures. And price pulled back and closed below the low of the previous bar, which is always a little bit of a sign of weakness. You've got all these exaggerated spreads, and while the levels aren't being particularly well supported, the zones are. You can see the market spent considerable time in here, and it looks like it's just moving back to this lower zone in here at this point in time. So you may find the market trading in here for a little period of time in an attempt to consolidate and hold on to that level. It is preferable to see the market back at more normal trading levels. Volumes have reduced pretty much to the average over the last 3 weeks, although spreads do remain exaggerated to a large degree. Into the currencies now. This is the Euro-US dollar currency pair, and price moved up to this level this week. It did push slightly above it and then faded back to this level. This is the important level, and it's a logical level. It's what you want to see the market doing, moving between the levels in a logical manner and closing at those logical levels, not hanging mid-zone so much. Now, you would almost certainly see a test for supply within the range of the previous bar next week, and then a response depending on how much supply is drawn out. It will also depend to a large degree on what the US dollar is doing. I expect that's going to attempt to consolidate sideways within that range, and that'll probably see this market come back and test for supply in here at this level. If the US dollar is a little weaker, you may see the market move up here to that level. But there's no doubt that this is the important level right at this point in time. British pound currency futures, and they've also moved up and closed at a logical level. It's always comforting to see that. Suggests you've got your levels right and the market is respecting its previous levels. Volumes are reducing and are slightly below the average now and have done for the last 3 weeks. The previous 2 weeks were only just a fraction below average, so that wasn't too bad, but this week has dropped a bit further down, and that can leave the market a little vulnerable to supply begins to increase for some reason. So very similar to the euro, this is where the market's expected to be trading next week. If the US dollar was particularly weak, you will see it up here. And this is the important level at this point in time. Japanese yen currency futures, and they're attempting to hold on and consolidate at this level and doing a reasonable job at it so far. It was a bit vulnerable down here, but it's held on. Traded volumes are almost average, so it is genuine trading, and it's doing a reasonable job to hold on in this zone here. It's not looking particularly strong, there's no doubt about that. But what weakness has emerged is being absorbed by the market at this point in time, and prices trading sideways. I expect that it will remain vulnerable for some time. And if any great supply did emerge, this market would probably break down pretty easily. But it's holding on at this point in time, and that's the important thing, at least in the near term. Aussie dollar currency futures, and they did push higher this week. It is being left hanging to some degree, even pushed above the high of that bar. This market's certainly stronger than weaker. Even when the weakness did emerge on this bar, it pulled back to a logical level, found support, and almost straight away it's recovered the lost ground and pushed back above it. This market's certainly stronger than weaker at this point in time. You can see volumes remain around the average, so it's genuine trading. The market does look like it might like to move up to this level. So we'll see how that goes next week. If there's any weakness in the US dollar, the market's moving up here for sure. If the US dollar is stronger, it's back to this level, and this is the zone the market's likely to trade in over the next little period. Bitcoin futures. Bitcoin futures traded up towards the highs of the little range this week, up here, after looking vulnerable down here at the lows of the range, where it looked threatening on this bar, found some support on this bar, then pushed higher to the mid-range, tested for supply this week below the previous bar's close, and then pushed up to the highs of the range towards the end of the week. I would expect some testing for supply just below this level next week, because there is expected to be some supply drawn out from the left here where the market gapped lower, and certainly some supply up here from trapped holders who have been in a weak position for some time now. So the market will likely trade just below the highs of the range for a little period, just to make sure that supply is relatively low. And if it is, there may be an attempt to break out like that and absorb the supply that's expected to be drawn out from the left here. So it's looking a little more promising. If during this period here, supply is drawn out, you'll see a deeper pullback to challenge those sellers prior to any attempt to move higher. But it's certainly looking more positive at this point in time. And if supply is found to be low early in the week, you may see an attempt to push higher. Just back to the US dollar index futures quickly. Now you've seen all those charts. You can clearly see that the market is moving lower. It closed below the previous bar's low last week, only just, and it's moved down to this next lower level, this zone in here. I do expect the market will attempt to consolidate at this level. It did so last week at that level. If you look, you can see the market did push higher in an attempt to consolidate in here, but that failed and price moved lower. So that's also a possibility. And if price does move lower, this is the next lower zone here that the market would move down to if weakness continued to emerge. Volume was about average, so it was genuine trading this week, whereas it was above average last week. So that was weakness being drawn out last week on this bar. It does appear that selling pressure has eased somewhat, and the close slightly off the week's low suggests there was some buying support in the market. So I do expect a stronger attempt to hold on to this zone next week. We'll see how it goes. Thanks for your time. See you next week. See ya.